Good afternoon and welcome back. This is US Home Talk. We are live every Wednesday at noon and on demand at ushometalk.com or wherever you guys find your podcasts. I'm your host, Marcus Walgrave with the South Dakota Home Team, powered by Hague Realtors. And we are going to be taking your questions during today's show. Anything and everything real estate. Our call-in number is 612-234-7585. You guys can also leave us a message in the comments section on Facebook. We are going to be talking about homeowners insurance, and we obviously have Evan Little, our producer, and also insurance expert here with us here today. So, we're going to try to hammer Evan with all the tough questions. Evan, how's it going today?
Really, really good. I mean, as always, it's US Home Talk time, which means it's the best time of the week.
It is. I tell you what. Say, Evan, you work for Paragon Insurance Group. If you're an individual out there that may not know too much about homeowners insurance, you have insurance agents and you have insurance brokers, just to kind of give some basic understanding of the two. You typically, an agent is going to be working for one specific insurance company provider, but you yourself, Evan, you working for Paragon Insurance Group, you guys had that ability to, in a sense, work with multiple insurance companies and to find the best deal or package for a consumer. That's kind of the benefits of working with somebody like yourself, being an insurance broker.
Yeah, so much like with home loans, you have brokerages that'll work with multiple banks, and then you have bankers that work for a specific bank. In insurance, it's called being a captive agent versus being an independent agent. I'm an independent agent. We're an independent agency. So here in Minnesota, we primarily work with about 8 carriers. Some of them everyone's heard of. Some of them basically no one's heard of. But then we also have secondary markets that we can reach out to and stuff. The pros and cons of that are, I think, pretty straightforward. Because of the fact that I'm not a direct employee of a company, I have the option of, finding the better fit for my client, as opposed to trying to make the client fit the company every time. And also, obviously, it means that if someone comes back with a rate that's astronomically high, I have multiple other options to go to and try and get a better deal.
That's always key. I mean, I think it's something to where, myself being a full-time realtor, representing buyers and sellers and investors with their real estate goals and transactions. One thing that I always had experienced earlier in my career, when I maybe was working more with the first-time home buyers, is simply, there was just that time when they had a budget, maybe that budget was set in a sense with their mortgage bank or their mortgage broker, and simply just saying, hey, this is kind of where we're at. This is where we need to be in terms of monthly expenses. I understand that your car insurance might be with this company, but we can't quite qualify this individual for a loan until we can kind of get some of the numbers a little bit more favorable. So when we get in those situations, that's where somebody like yourself, Evan, working for a company like Paragon Insurance Group is that you can say, okay, hey, we do have this the quote that the client got from their car company is just super duper high. I'm certain I can find 1 or 2 options that are better than that to get them in that position where they can qualify for a home loan.
Yeah. It's funny that you bring that up. The monthly payment thing is always you're trying to get the taxes, the insurance, and the actual loan payment under a certain number for a lot of buyers, particularly first time home buyers. Right? They're shopping based on payment, and something that comes up a lot is trying to get that perfect deal. And we were talking about this a little bit before the show, and we occasionally see this where people don't really. They don't take the time in advance to talk to an insurance agent about like what they should be looking for or not. And this is also a difference between more experienced agents and more amateur agents in the market. Is sometimes that monthly price might look good, but there's specific features or regions that drive up home insurance prices enough that it can make or break the deal on the insurance side of the thing. And, obviously I'm looking out for my client. I'm trying to get him the best deal possible. But sometimes it's just roof age is a really big one here in the upper Midwest. And truthfully, across a lot of the country now, that's a growing issue where, if a house has a 15 plus year old roof, A lot of companies won't even take it, and the ones that will, the Zillow estimate or whatever for the insurance on the property is $600, and then you get a quote back from someone like me, and it's like the cheapest I could find is $3,000 a year, and all of a sudden the numbers don't work anymore, and everyone's scrambling to figure out what to do.
We talk about how important communication is, when you are trying to do a real estate transaction. I mean, communication, regardless of the industry you're in, is very key, right? I think that's a fair statement to make. But to your point exactly, I mean, you don't want to be put in that position in a sense where you fall in love with a property, you get things going, you get past the property inspection, maybe the appraisal was already ordered and done as well because of a specific timeline that you had to achieve with a closing date. You got money invested. You have time invested. When you get that far into the transaction stages, property inspection can be $650 plus. Appraisal can be in that territory, $500 plus. So you don't really want to get caught in that position where you're in love with the house, and you maybe didn't have those conversations about, hey, we can't be in this position where we're going to fall in love with the house. And then what I was saying, hey, if Evan was able to get you a general quote, say if you can find a property like this, but then we find out that it's a 30-year-old roof, and like you said, Evan, it totally blows the insurance monthly cost out of the water, and it puts you in that position where it's like, you could not only lose out on a property that you were really in love with, but you lost time, and you also lost money in terms of investing in that property inspection or that appraisal as well. So we having those conversations and making sure that the client is up to date with what's going on, understands the plan. But like we were kind of talking about before the show, Evan, is how important it is for the insurance agent and the realtor just to have a good line of communication. Obviously, there's plenty of new agents out there, realtor agents out there that you can learn a lot from their insurance agent that their client's working for. And an insurance agent or insurance broker can simply just say, hey, you got to keep an eye out for the roof because this is, the numbers are tight for this individual. And so we can't be put in that position where, once we find out, that we're already into it this far and then the deal's dead because of something like that. So just having those conversations up front, I mean, you're going to save a lot of aches and pains, and money and time, just having good communication. So can't emphasize that enough. Doesn't really matter who you're talking with, and good communication with your realtor, good communication with your mortgage broker, good communication with your insurance broker. So, we are in the month of April, and the reason why I say that is it's the spring real estate market, right? Things are really hot and there are a lot of activity going on. This is typically the time of year where you're going to see the most sellers hit the market, get their properties on the market for sale. Also, the time of year where we have the most number of buyers who are looking to buy a home or move up buyers, whatever the case might be. And it also aligns with, in a sense, severe weather time. I mean, this is kind of a tornado season. Before I kind of went on to the show, I was, doing some basic Google searching in terms of like when tornado season is. And the reason why I mentioned tornado season and just kind of emphasize severe weather, right? I mean, you kind of talk about the roofs and we're not just talking tornadoes, but I mean, hail can just be a big pain in everybody's, side when it comes to this time of year. But typically, this is from, usatoday.com. Typically central U.S. peak season runs from April through June. And, but as we already know, if you've been paying attention to the news, we've already had tornadoes happening here in the U.S. Kind of more, that southeast kind of seems to be the time of year where those tornadoes are kind of peaking. When you start getting into like the plains, central plains, northern plains, Midwest, that kind of leans closer to that June, July. So we have
late May, June, July.
Yeah. Yep. So as an insurance, and these can be again some crucial points to where in a transaction, a majority of the transactions in a calendar year are going to be happening during that same time frame. So there can be a lot of moving parts, and it could be in one of those situations where you get past the property inspection. Your realtor understands what the game plan is, and one knows how to kind of keep an eye out for some red flags on some exterior building materials like shingles, things of that nature, or is doing their job and making sure that they're reviewing the property disclosure statement and saying, hey, the seller doesn't know the age of this roof, and this house has been sold 3 times over the last 30 years. It's probably safe to say that it's not a new roof. It's not new shingles. Yeah, I think that's something safe to say.
I would say that actually one of the biggest parts of my job is doing the legwork to figure out roof age. Yeah. As far as like the manual work that I'm doing, because disclosure statements, oftentimes it is just roof age greater than 8 years, which, obviously in a house that's 30 or 40 years old leaves a lot of room between that 8-year mark and the original home construction date. And truthfully, you mentioned like a 30-year-old roof blowing up a deal. It can be less than that. A lot of carriers now are rejecting stuff even as young as 15-ish years. Some carriers I work with won't take anything past 10 without going to a cost depreciation schedule on it, which basically means that they're trying to make it so when you do have a roof claim that you just don't make a claim. They don't want to pay any portion of that. They want you to just pay out of pocket, and then once you have the new roof, they're happy to put it on a replacement cost schedule. So I do.
Oh, sorry. As I say, just to kind of dumb down that point, was that if you do have an old roof, right? That cost appreciation concept, and it's 15 years old. They're going to say, hey, well, the life of these shingles are rated at 20 years, so 75% of it is already expired. So we're going to insure only 25% of it because based on these type of shingles, we only have 5 years left. So if they do need to get replaced after you move in, that's what we're covering, 25%, because there's only 25% life left.
And it's also worth noting that it's 25% after your deductible too.
Yeah.
So if you get a deductible of like $2,000 and your roof replacement, let's just say for the sake of measuring this out easily, let's say the roof replacement's going to cost $12,000. Well, you're going to pay that first $2,000 because the deductible's all yours, and then you have a remaining $10,000, and then they go, okay, yeah, based off of our cost appreciation schedule for this roof type, we only pay 25%. So now you're paying another $7,500, and the insurance company is chipping in $2,500. In some states, they're not allowed to increase your rates for not at fault wind, hail, roof claims, but that is not true of a lot of states. So it may be worth filing a claim for that, but probably not, depending on where you live. But more broadly than that, I was going to say a lot of my time is spent contacting municipalities and so on about specific addresses and going, hey, do you have any construction permits on this house? Can I, is there a general contractor or a roofing contractor that did work 8 years ago or 9 years ago? If so, great. I can prove that the roof is young enough to insure with a whole bunch of companies. If not, if there's no property records and the seller doesn't know when it was last replaced, then a lot of companies will just rate it as its original roof. And it takes a lot of work, like unless you can prove go out and look at it. Those are brand new shingles. Some of them will be like, oh, okay, so something's going on here. Or if you can find a previous claim on the address under the insurance clue reports, that's a wind hail related loss. And it looks like it's got new shingles, but it's in an area that doesn't do construction permits. Some companies will accept that, but it's a lot of hoops to jump through. But it is like the number one rating requirement right now across the United States. Wind hail losses are out of control in a lot of areas. Some states are trying to mitigate it by allowing companies to write less replacement cost schedule stuff. But ultimately speaking, the replacement cost itemization of the roof is such an important coverage to have for most people because most homeowners can't afford to pay a roof replacement out of pocket. It's just not something that's feasible for most American homeowners.
Yeah, because I mean, there's big costs to be a buyer out there. Especially if you're doing a home loan. And a lot of this
100%.
stuff is required. If almost everything that is required in terms when there is a loan involved. So the client, the consumer doesn't have an option. If you have a loan, you in a sense have to have homeowners insurance to
Yep.
protect the mortgagee. Excuse me, the mortgager, the one who has the financial lien against the property. So we've had this conversations in the past, right? I mean, if you are somebody who maybe knows individuals who buy homes with cash, ask them if they're still getting homeowners insurance. It's likely that they're going to say, yes, we still get homeowners insurance. So I think that that's something where it's yes, it is required, virtually for every loan that is out there. But don't feel like, you're being taken advantage of because the cash buyers are for the most part getting home loans as well. Excuse me, homeowners insurance policies
Homeowners
as
insurance,
well.
yeah. Yeah, it's one of those things that everybody complains about, but truthfully, the value proposition is pretty high. One thing that I've enjoyed informing people of is like you know, everyone knows about roadside assistance on your auto insurance, like whether that's an option or you choose to get AAA or whatever. A lot of home insurance carriers offer similar types of things where they allow you to make certain specific types of claims, generally on their more premium packages, which will have higher sublimits for valuable items and stuff like that. But they'll have little things like where you can get a lock change reimbursed or things like that, and it doesn't count against you. It's just a little they pay up to $200 for a locksmith or whatever because you lost your key and need to get back into the house or whatever. And those are all sorts of little add-ons to the policy that increase the value proposition for a homeowner.
When we talk about add-ons to policies, I think that that's something that, especially again, if you're a first-time home buyer, maybe a first-time move-up buyer, those are important questions to ask in terms of like, hey, I get this policy and it's covering what? Have the conversation with it, ask the questions. What is this all covering? And the reason why I bring that up again, I mean, this is spring real estate market, but it's also spring weather, right? We have some severe weather that pushes through a good chunk of the U.S. This time of year and into early summer. And, one thing that we see here in the Sioux Falls area, the Sioux Empire, we have pockets of low elevation and that are either in or near floodplains and part of the FEMA map. And that's something to where if it's a newer home or a home that is, maybe an older home that had to get updated with some drain tile, we have quite a bit of homes because a lot of our new homes it's required, a city ordinance to have drain tile and sump pump basins installed, to have insurance for that. Because, from my understanding, not a lot of general policies cover something like that. You have to add what is called a rider to get additional coverage, for things like sump pumps and sump pump basins.
Yeah, that's correct. Broadly speaking, obviously, one thing that's important to note is standard homeowners insurance policies don't cover flood. It is a specific exclusion that's on pretty much every standard policy out there. You have to go to the federal program for flood insurance, but for the middle ground type thing, obviously, when we're thinking flood insurance, we're thinking, there's a big storm or, river busts out of its banks and that kind of thing. The sort of stuff that makes the news. And that is generally what flood insurance is used for. However, there are riders for your homeowner's insurance policy that will cover water backup. And generally speaking, those are the sorts of things that you're looking to for sump pumps, water drain tiles and stuff. And those types of policy additions are going to vary from company to company as far as what they specifically cover. So insurance is interesting. There's a standard form template for policies that companies generally start from. It's called ISO, and I think it's the Insurance Standards Organization off the top of my head. And so, there's an ISO Form 3 or Form 5 or whatever. And those don't cover water backup by default. And each company will underwrite their own version of water backup or will get onto a larger underwritten policy between multiple carriers for water backup type claims. And generally, those types of riders have specific limitations that are much lower than what you would be looking at for other types of claims for your homeowner. So I have water backup coverage because I'm here in the Midwest as well. But my limit on my policy is $20,000 for water backup. And that's basically to cover things in my basement when water backs up, right? If I have an actual flood here, knock on wood, I'm in a very, very low flood risk area, but I do not have flood insurance personally. Even though I do recommend that most people in the Midwest get it, I'm just like, I happen to be on a hill. Like there are spots where there's probably no risk of flood. If you're on the very top of like a mountain peak, you're probably good unless, we're looking at getting on Noah's Ark. Hopefully we don't head towards that. But yeah, there are situations where you might be able to not worry about it. But truthfully, it is something worth looking at for nearly all home buyers. And I just have opted not to personally. But water backup here in the Midwest is the second leading cause of claims for most carriers. Yeah, so wind hail is the number one loss leader. Everybody's paying out wind hail claims. Water backup coverage, not only is it like number 2 or number 3 for most carriers throughout the Midwest, it is also various carriers have said different numbers for this because it's going to vary based off of their premium and losses and so on. But a lot of them on water backup addendums to the policy, they pay out roughly $2 for every dollar they take in on that type of rider. It's something that customers expect, but it is not something that carriers make a lot of money on. In fact, it's quite the opposite. Because it's one of those things that because it's an optional coverage and because it's a very high volume thing that gets claimed a lot, it's very difficult for them to price it accurately without running into the issue of, another carrier offering it much cheaper and then losing a bunch of customers. So,
yeah, that's super interesting, and I think that's something too where at the consumer level, there is some, obviously to your point, what you said earlier, each carrier is going to have a different definition or policy in terms of covering things like this. But, that's something that I've seen my clients kind of run into in the past in terms of how their carrier defines water penetration.
Yep.
If it came in through the window well, if it came up through the sump pump basin, or is this a main line, sewer line that this is a sewer backup? So I mean that there's each carrier may in a sense define it differently, and just at least having those conversations and understanding, hey, I'm in love with this house. It's a newer house. It had a sump. It has a sump pump basin. There's a sump pump in it. When we were there showing it, we saw that it was running, and we looked out the back, the holes that it's hooked up to. We can see that it has been running, and it maybe in a sense like on a daily basis. You're definitely going to want to have your conversation with somebody like Evan and say, Evan, we're not worried about this. We're going to go ahead and invest in a backup sump pump system, to take care of it, that's battery powered, even if there's a storm, whatever the case might be. And so we're not concerned about it, but what do we need to do to make sure that we are insured properly if something were to happen and there was some failure, whether the backup failed or whatever the case might be. And just having those conversations, becoming more educated in terms of how you can protect your which is most likely your most valuable asset in being real estate.
That brings up another good point too, and something that I've dealt with a lot in the last year, 2 years. Seller disclosures often miss the claims that they've had. They will forget about it, whether it's intentional or not is between them and their agent and God. But I have informed potential buyers of probable issues with homes just based off of claims volumes before. Because when I'm quoting a new property, right, you're moving into 123 Fake Street, and I'll go, great, yeah, absolutely. Let me pull up the listing and look at the house and so on. I get all the info about it, the square footage, and I put it in. I run reports, just like how when you buy auto insurance, you're getting your driver's record checked and They can pull up, have you made claims? Do you have speeding tickets and so on? We have the same sort of database for homeowners insurance, which not only shows the claims that you've made on previous policies, but also claims on that address. And so I've had multiple situations in which it's like, yeah, absolutely. Let me run quotes for this. And then I'll go back to the buyer and I'll go, are you aware that there have been 3 water intrusion claims? And I can't see all the details, but I can see the number that they paid out for and the type of claim and when the claim was made and so on. And it's like, yeah, so I see here, this is, they say that the roof is 2 years old. Yep, this is May of last year when I got my roof replaced too. Got that. But then there's this claim and this claim and this claim. Were you aware of those? Did they disclose that repairs had to be made to the basement twice because there was a water backup flood or something like that? Because I can see those types of things. And, sometimes the buyer's like, yep, absolutely, that was on the disclosure. And sometimes the buyer's like,
Yeah, right. Those you would assume would be easy to remember because usually when you get water penetration in a real estate property, it is pretty severe and dramatic and typically expensive as well.
If you have a finished basement and you have a water backup claim or a water intrusion claim in that basement, I mean, I would say at least 7 out of 10 times you're talking about tearing out all the carpet, tearing out a bunch of the drywall, replacing a big chunk of the furniture. Because even if you get the mitigation company in like right away, there's still water in behind those walls, and you have to start looking to see if there's going to be mold problems. And once you're looking, you're talking about tearing back at drywall, so now you're already repairing a whole bunch of it. So it's a major thing. I have multiple clients a year that go through that sort of thing. I have been through my own minor water backup thing, but luckily my basement isn't completely finished, so there wasn't really any damage. Knock on wood. But it's a common thing in certain regions of the United States.
And that's a good point too, in terms of how was it mitigated? Was it a do-it-yourself kind of a deal? You pull out the carpet and put down a couple room fans in there, or did you hire some professionals who come in with commercial grade equipment to get that stuff cleaned up? So good questions to ask. Obviously, can't emphasize enough about the importance of just having good line of communication and having an understanding of what your options are, what you need to do, letting your insurance agent know, your insurance broker know, say, hey, this is what I'm buying. Do you have any thoughts in terms of additional coverage that I should be getting? You work with somebody like Evan who has a ton of experience in the insurance industry. He's going to be able to rely on his expertise from years of experience and say, this is what you need, and this is what I recommend that you add on to it. Obviously, it's your house, your money, so it's your choice. But these are my recommendations.
Yeah, absolutely. There's also some value, obviously I would like to work with everybody. I would love your business regardless of where you live. However, sometimes working with a local professional, just like working with a local real estate agent, has some key benefits. For instance, our agency does still have policies that we have in Florida. We have plenty of clients that spend some time here and some time down south, Florida, Arizona, etc. And we do work in those states. However, in about the last year or so, we just realized that it was so difficult for us to get quotes done on Florida properties without being able to go on foot and inspect them ourselves, that we've, developed connections with local agencies there where it's, we're going to send you a client of ours and say, hey, go ahead and help them with this Florida property, just because that's such a difficult and localized market to work in. We've had much the same experience with a lot of California as well. And, there are actual huge benefits to that sometimes. So, I have plenty of clients here in Minnesota and Wisconsin and North and South Dakota and Colorado and so on. And that's easy. Most of the time, I'm not worried about having to go and do an on-foot inspection of a home. However, you might want to look at someone local. Absolutely. If you have a tough insurance problem, you're looking at a very unique property, there is a lot of value with working with a independent agent that can actually go and set foot on the property and walk through it with you. You've got you're buying a compound with like 5 buildings on it, and it's really difficult to rate them because you have one house which has all the listing pictures on Zillow, and then you have a bunch of other stuff. You probably want an agent that can come out and walk through the property and really assess what each building is worth, rather than just trying to go on a website and type in, well, I have these other buildings, so I just need an extra 50 grand or whatever.
And a lot of our acreages are set up for that. They're going to have Morton buildings for all their toys, and maybe it was an original farmstead where you have barns and shops and sheds and things of that nature. So,
there's the old farmhouse and there's the pole barn and so on. Yeah,
you got the summer kitchen and some turn of the century type aged property structures on that property. So, you kind of mentioned some national stuff there, and again, just was looking over some insurance news here recently, and just going to kind of cover a couple things that I saw online. We had talked about this earlier in previous shows on U.S. Home Talk, not an earlier today's show, but previous shows. States like Florida, as you brought up, in California, and one of the things that I thought was super interesting that you shared with us a couple months back. Was that in California, there were some major carriers saying, "Hey, we are no longer going to issue new policies in the state of California." So I was like, "Whoa, that's because they're some big players, right? I mean, they're big companies," and I was kind of amazed by that announcement. And then here just recently, State Farm is non-renewing 30,000 California homeowners and renters. So that's kind of I found that even more interesting, because to just say, hey, we're not going to do any new ones. I mean, I can understand that, right? But it can be a difficult or a struggle for a homeowner who was really enjoying the policy that they had and the services that they were getting, and then their insurance company gives them a call up and says, hey, sorry, we're not going to renew you. You're going to have to find something else. But again, I mean, if you find yourself in a position like that, reach out to somebody like Evan Little, and being an insurance broker, is going to be able to, at the very least, reach out to half a dozen plus, partners that they work closely with, and see what your options are for getting coverage. So here's a question, Evan. I apologize. I didn't mean to interrupt you.
No, go ahead.
In a situation like this, when you do have a home loan and homeowner insurance is required, how does that all work? I mean, does the insurance company like State Farm says, hey, we're not going to renew you? Do they have to give you like 30-day notice or 60-day notice, or is it like, 2-day notice? And obviously, or simply is it you have 30 days to then get new coverage? I mean, is there kind of like a national rule of thumb with situations like this?
Yes and no. I don't think that there are any states that require less than 30 days notice. Many require more. Some of them are 60 or even 90 days for a non-renewal. Cancellation, the same sort of thing. Cancellation means that you're midterm and they just want to end it. There are going to be cancellation notice requirements based off of your state regulations. Same thing for non-renewal. They have to let you know at least X days in advance. So when I see articles like about State Farm, for instance, non-renewing certain types of policies or whatever, there are some people in those areas that are going to be able to have State Farm insurance and going to be able to renew, because their renewal is in that window, where it's like, they're announcing that they're non-renewing, but their renewal is only a week away. So they're going to get to renew. They're going to get a week and a year of insurance if they want. However, when you're looking at those sorts of situations, it falls on the homeowner initially. You get a notice of non-renewal for whatever reason. They're pulling out of your state entirely, or just your area, or there's something about your property that they don't want to do anymore. We see this a lot. A lot of companies have pulled out of mid-sized residential, like apartment buildings that have like 16, 30 units, that kind of thing. A lot of companies have pulled back from that market. And so, the owner of that building, or you as a homeowner, you'll get a non-renewal notice, and it's up to you to find insurance to make good on your loan, because you are required to have insurance. For a homeowner, if you fail to find insurance, right? You just can't find anything. There's what's called a fair plan option, which is the state subsidized market that all the carriers pay into. But it's basically the insurance is very bad. Honestly, it does not have the same sorts of coverages. It has extremely limited amounts that it can go up to. It is really originally meant for those sorts of like 100-year-old farmhouses that haven't been updated kind of thing. And it's been stretched to include a whole bunch of other stuff. And in some states, the fair plan or that type of option has started to become like, it's supposed to be the insurer of last resort. And then you find out that it's the biggest insurance company in the state, which is the case right now in Florida. There's a separate piece to this too, which is sometimes that's still not affordable. The fair plan option is excessively expensive and the homeowner can't afford it. And then you run into a situation of the loan company will do what's called forced place insurance. And if you've ever had issues with your insurance where you have escrow set up for your account, and like your insurance is supposed to be paid by your mortgage company, but then your mortgage company doesn't get the notice, so they don't send out the payment, and you get a letter from the insurance company and you get things back on check, and maybe you pay that yourself, right? You go, oh yeah, I can just pay it, get things back on track, and then you get a letter from your mortgage company saying, we don't think you have insurance right now. And if you don't have insurance in the next 30 days, then we're going to force place insurance on you. Yes. And that's a scary notice to get, and it's an important thing. But the key is that insurance they're buying home insurance, but it's not for you. It's basically just for them. If the house is a total loss, if the house is a total loss, I believe that you still get your equity position back. However, oftentimes forced placement insurance doesn't have things like liability coverage for you. It is just like structure coverage, and it's very expensive. Oftentimes we're talking about like 2 or 3 times what the premium would normally be for home insurance. So obviously it's not something that you want. And it's like, if you can't afford your home insurance and then all of a sudden forced place insurance comes in, you're probably not going to be able to afford your home payment at that point. Yep. And then you're going to be heading towards a whole different scenario.
Yeah, I mean, that's definitely, just some things. I think insurance is going to be talked about more often. Homeowners insurance is going to be talked about more often here in the upcoming months and probably years as well. We talked about the wind, hail claims and there's the severe weather that we've been seeing here, an uptick in, and I think that's something to where when we talk about U.S. Home insurance premiums, there's some forecasting that we might hit some record highs later this year, and so as we always kind of talked about, Evan, we seem like we're in this period of severe weather on an annual basis here in these last handful of years, and if that ever were to change to where things became less severe, it's probably safe to say that insurance isn't going to get cheaper.
Well,
so it just kind of stays where it's at.
You'd think that, but actually, insurance is such a tightly regulated market that. So there's 2 things to focus on here. First of all, insurance companies don't actually make money on the premium that you pay. For property and casualty insurance, generally speaking, most companies operate very, very thin margins if they're profitable at all. And most of the time, they operate slightly in the red, premium paid in versus claims paid out. However, the key is that they're making money on that period in between. They take in your premium, and then you don't make a claim for 10 years, right? So they've had that $1,000 a year or whatever for those 10 years, and they've made money on investing that, on the interest from it, and so on. And then when they do have to pay out your claim, even if it is a little larger, say they took $10,000 over those 10 years, and then they paid out an $11,000 claim, because of the fact that they were the one holding the money in that period, generally speaking, they're coming out slightly ahead. So there's a loss ratio, which is the expression of just premium in versus claims out. But then there's the combined ratio, which includes all the investment pieces of insurance companies' profile. Now, that said, insurance does occasionally get cheaper, but it's really one of those things that's driven, obviously, by inflation and so on. And in the environment we're in, you can go on websites like Quote Wizard or whatever, and see their readouts of like the average rate increases. In some states, you see -2%. And you're like, oh, cool, insurance got a little cheaper in Idaho. And then you scroll up and you see Arkansas, it went up by 20% according to them. I think the official number from our agency was the average increase we saw in homeowners last year was like 15.5%. Though I don't remember if that was like a final number or if that was mid-year. And Minnesota, we saw some pretty serious rate increases. Inflation isn't the only thing to blame. It's kind of like it's a double piece. There's inflation on the one side, which drives up cost of repair, but then also the raising interest rate environment means that the liquidity in the market lowers, so the amount that they can make on that float goes down, and so the combined ratio gets worse, and so they have to take in more premium to make the numbers work. So, yeah, it's interesting stuff in an abstract financial sense.
Yeah, it definitely is interesting. I think that's another kind of an interesting point, when we talk about in the beginning of the show about tornado season, right? And I was looking at Tornado Alley. If you're not familiar with it, it's a specific area within the U.S. that typically the most tornadoes happen in. But from what I was reading and noticing, just kind of noticing on a personal interest of weather, it definitely seemed like we weren't getting as many tornadoes that in the Central Plains or Northern Plains like we had in the past. Like when I was little, it seemed like we always heard of a tornado or two happening in our home town of Laverne in southwest Minnesota. It seemed like we always heard about that, and then but maybe not so much here in the last 10, 15 years. And there's it seems like that Tornado Alley has been shifting east. So I think, to that, maybe as the part of that double whammy, right? You have some inflation, but then maybe some severe weather has now shifted into your region that typically didn't have severe weather, and that might be a reason why premiums are going up in your region.
Yep, and obviously shifting weather patterns have other secondary effects. Wildfire risk has been going up across pretty much all of the United States, but we hear about it more with California. But there are serious concerns about wildfire risk in other areas of the country. Looking at if you want to dig through the data, it's interesting to see which states tend to be the most expensive versus the least expensive for property and casualty insurance. Some of it is like what you'd expect. Here in the Midwest, we have very high rates because a lot of wind hail claims, right?
Yeah.
Like Oregon, home insurance tends to be very cheap because of the fact that they don't have severe weather. There's not exactly, there's no seismic activity. There's no floods. Nothing happens. Oregon's just kind of chill. It lightly rains a lot. But who knows? That could start shifting in the future as climate change ramps up. We've seen these torrential rainstorms in California that just were unending. Basically unprecedented types of rain that haven't been seen in 100 years. It's completely possible we might see that sort of stuff in the Pacific Northwest in the future. We don't know. Tornado Alley, like you said, it's sort of shifted. The tornado season has kind of changed in scope. We're seeing more severe but also more frequent tornadoes throughout the lower Midwest, even like the northern reaches of Texas and stuff like that. Nebraska, according to a lot of sources, has among the highest annual homeowners insurance premiums, and it's that's the confluence of all of it. They've got really strong windstorms, they've got really strong hailstorms, there's wildfire risk, there's all of it except for maybe seismic activity. So
yeah, for now.
For now.
I just think of just here in the last couple of days in my home city right now of Sioux Falls, South Dakota. We had some clear high skies, no clouds in the sky, maybe a couple clouds here and there. But we had pretty much all day was 30-mile-an-hour winds gusting into 45, 50. And so when you take something like that, a wind like that, that's 50 miles per hour plus, and you take a quarter size hail, It's like, well, quarter size hail on a nice, maybe a calm day, or where it just kind of comes in and falls down, maybe 15-mile-an-hour winds. You may be able to get away with no damage anywhere, but obviously, you mask that with 50, 60-mile-an-hour winds and quarter-size hail. It's like, yeah, I mean, you could really beat up some siding and beat up some shingles pretty easily that way. So it's understandable when you're in the central plains, northern plains, where the land is quite flat, and the wind, it doesn't take much for the wind to kind of build up some power and start ripping. So. But Evan, thank you so much for giving us your knowledge in the insurance world. If you guys are looking for maybe a new quote, you can always reach out to Evan Little. Find his information on our website, ushometalk.com. Evan, thank you for filling us in and what's going on in the insurance world here today.
Yeah, absolutely. It's always a good time to talk about the very exciting world, riveting, exciting world of home insurance.
But today's time, when everybody's is cost of living is on the rise. I mean, I think people are inquiring about, hey, is there maybe a better policy for me or a better rate somewhere, and you can get that information from Evan. So we want to thank you all for your time and to tune in here today, watching us live, and for your support at ushometalk.com. You guys can find today's show or any of our past shows on our website as well. This is Marcus Walgrave, Evan Little, and we hope you guys have a blessed day.